Hey all, welcome to ShareTrek. This is Raj here. I hope you guys had a great weekend. And I must confess that it's been difficult to find meaningful topics to talk about in genomic investments. And I hate to beat a dead horse. So today is not going to be genomics, but today's topic will give us all an idea of how much risk our genomic stocks are sitting on. For that matter, how much risk we are immersed in, regardless of whether you are invested in the stock market or not. Today, I will share with you information about the health of the banks and the consideration that Fed Chief Powell will have to give to the banks while deciding on raising interest rates. I'll also be talking about Microsoft versus Google, as finally Microsoft seems to be beating Google. I'll also explain why I think so. So it will be an interesting session, so let's get started. Welcome back, friends. Just a quick housekeeping note. US oil is coming down, which is good for inflation. I personally think that indices are likely to fall further as risks in the economy become clearer. We could also have some volatility on Tuesday when Trump is likely to be indicted. We don't know for sure if that's going to happen, but Trump has I think truthed it out that he is going to be indicted, and there is a speculation that there could be some disturbance or violence on Tuesday. That could also have a little bit of impact on the markets overall, so be careful out there. And now on to the main course, banks and their US bond holdings. In this regard, here is the information I have been able to gather. First, let me explain the two categories of bond holdings banks have. Obviously, one category is designed to provide long-term stability and the other category is for short-term needs. The first category of bonds are classified as held-to-maturity bonds, and as the interest rate rises, the loss of face value on these bonds only accrue, and banks don't have to account them for accrued losses in this category. In other words, their capital requirement doesn't fall. There's another category called available for sale bonds, and holdings in this category require the bank to account for losses. Here, the drop in value have to be recorded to reflect a corresponding drop in capital levels, even if the accrued loss is not realized. So the first category where losses need not be recorded, we have the following holdings. Accrued losses on bond portfolio at the end of 31st December 2021 as a result of interest rate hikes is shown in the table out here. And as you can see, Bank of America has got $109 billion of accrued losses in the held to mature category. And in the same category, we have JP Morgan with 36 billion, Wells Fargo with 41 billion, Citigroup with 25 billion, and Goldman Sachs with $1 billion. In contrast, SVB had a loss of 15 billion accrued on a portfolio of 91 billion bonds in this category. On the other hand, Bank of America not only had the largest accrued loss in the held to maturity bonds at 109 billion at the end of 31st December 2022, but also they had 221 billion of bonds classified under available for sale category, and on that portion of their holdings, they had a recorded loss of 4 billion at the end of 31st December 2022. And friends, after 31st December 2022, Fed raised the interest rate by 25 basis points, and now it is set to decide on another rate hike soon. And the market believes there will be a 25 basis point hikes on the card because the Fed cannot ignore inflation. And if the Fed lets the inflation go wild, it's going to be very difficult to rein it in. So they have to have a lot of control on it. But at the same time, every 25 basis point hike in interest rate is putting a lot of stress on the capital adequacy of the banks. So that is the consideration that you will have to have. So if there is another 25 basis point hike now from Powell, then that would mean that we have had a total of 50 basis point hikes since 31st December 2022. Can you imagine how much more losses Bank of America and others will have to book to their bond portfolio, and the stress that it will place on their capital adequacy? Now, when it comes to some other kind of businesses, let us say some business that sells hamburgers or something, you can always say, okay, let them, I mean, they are capitalist, and if they made a loss, it's their mistake, so let them go. But the problem with banks is that the average Joe has got their 401k in there, they have got their checking account, they receive their salary there, they pay their mortgage from there. So it's very messy. It's like we are immersed in this environment in which we have no control. And that's where the too big to fail kind of a concept comes in. And that's where politicians habitually capitulate, and the faith in capitalism gets a bit diluted, and we tend to get into corporate socialism. But what other option do we have? So that's my thought, and I have not been able to get the latest data sets on these banks as at the end of February. What was their accrued loss or what was the valuation? It's not available. When I search for US banks, especially for this data, I end up getting US bonds held by Japan, US bonds held by European countries and others, but not a peep on what's happening in the US itself. But I came across a very illuminating speech by FDIC Chairman Martin Gruenberg, whom you see here, at the Institute of International Bankers on March 6th, 2023. And I will now take you to that speech and review select paragraphs that gives us some more color on what's happening out here. And it kind of validates what I've already spoken to you about. Well, friends, here I'm picking up the speech right from the FDIC Federal Deposit Insurance Corporation website. And these remarks were delivered and last updated on March 6, 2023. And in this, I want to zero in on a particular paragraph. I'll draw your attention to this paragraph called interest rate risk. And in that, we have the statement that the current interest rate environment has had dramatic effects on the profitability and risk profile of banks' funding and investment strategies. First, as a result of the higher interest rates, longer-term maturity assets required by banks when interest rates were lower are now worth less than their face values. The result is that most banks have some amount of unrealized losses on securities. The total of these unrealized losses, including securities that are available for sale or held to maturity, was about $620 billion at year-end 2022. Unrealized losses on securities have meaningfully reduced the reported equity capital of the banking industry. This is one major information. The good news about this issue is that banks are generally in a strong financial condition and have not been forced to realize losses by selling depreciated securities. On the other hand, unrealized losses weaken the bank's future ability to meet unexpected liquidity needs. That is because these securities will generate less cash when sold than was originally anticipated, and because the sale often causes a reduction of regulatory capital. So the quality of the banks starts to decrease as the regulatory capital availability decreases. The increase in interest rate also has had direct effects on banks' income and expense. In 2022 bank results, we are seeing the typical near-term boost to bank income from higher interest rate, as the interest rates bank pay on deposit tend to lag increases in the market interest rates bank receive on loans. But over a period of time, all this gets into a wash situation. So that's a normal thing to happen. But over time, however, as market interest rates increase, banks will likely need to pay more interest to retain their deposits or accept some deposit outflows. So far, through year-end 2022, we have seen modest decreases in total deposit and modest increases in insured deposit. In aggregate, meaningful deposit outflows have not yet materialized, but banks will need to watch these trends carefully as the interest rate environment evolves. So basically, what I would read here is that as and when the interest rate goes up, it encourages people to save more, because now with less risk, they can get more returns. But at the same time, when they are putting the money into the bank, they are going to look at how much of their money is insured. So we have a limit of 250,000. So any ordinary person who is investing up to 250,000, they'll still be attracted to go in here. But people who have a high net worth and who have got more money available, they are likely to take out money from the banks. And when they start taking out money from the bank will have to have the cash ready. SVB had a problem out there because Peter Thiel and all his cohorts decided to ask for all their money at once. And that's why they had to sell their bonds at loss. And they got into trouble. So if many of these people decide to take out their money at once, then all these banks will have to liquidate all their assets. And we have the statement out here, which says the result is that for most banks have some amount of unrealized loss on securities. The total of these unrealized losses, including securities that are available for sale or held to maturity, were about 620 billion at year end 2022. Now that 620 billion, I bet, has gone down further because since 2022 we already had a 25 basis point hike, and Chairman Powell will have to think twice before increasing another 25 or 50 basis point or whatever he's going to do. So I wouldn't be surprised if we have a 10 basis point hike or something like that, because this is going to tip the banking industry overall. So this is the challenge that we are looking at. So if I was to conclude, I would say the 25 basis hike, 25 BPS hike looks imminent. And along with that, there may be tweaking of capital adequacy or some financial trickery to help the banks stay resilient. However, it is not very comforting for the average Joe who has a checking account that receives the salary check and has 401k invested in stocks and bank deposits. Basically, it is difficult for anyone to escape. Probably that is why if you look at the price of gold and Bitcoin, it has been picking up value rapidly. And I think that that trend is likely to continue until we have the news of the impending rate hike and the aftermath is decided. And then gold and Bitcoin can subside a little bit. But right now, the risk is stacking up on the banks. And yeah, so that's what the story is about the banks. So now you understand the deliberations that, at least part of the deliberation that Powell will have to look at. And if you look at it from a political perspective, it's a no-win situation because any kind of bailout is not desired by the general public. It's very unpopular. The last bailout after GFC did not go down well with the general public. So the government is loath to do any of that. In fact, Biden even said in his announcement when they bailed out SVB, saying that no taxpayer money was involved. But honestly, the FDIC doesn't have enough money to bail out all the banks. Their total holdings is a small percentage of the total loss that we are seeing for if all the banks were combined, where FDIC has insured deposits. And the best they can do is guarantee the $250,000 per person per account. But I don't see them being able to go more than that. So from a political perspective, it's a problem if the interest rate is raised and the banks fall. And at the same time, if the interest rate is not raised and inflation goes up, that's even a bigger political hot potato. And we have the elections coming up in 2024. So it's a very, very critical time. And I think that all of this can be fixed by changing some regulation, some liquidity standard or something which will make the banks more resilient. Because right now, if you think about it, whatever levels of liquidity is needed for the bank has been determined by the Fed. And the FDIC has determined 250,000 is the limit up to which they will cover insurance. All these are arbitrary numbers which have been decided by various organizations. What is the actual number that we need? Nobody knows. But there is a general faith in the institutions that if the institutions have made a determination that these are the levels at which deposits have to be maintained, or these are the levels at which insurance will be reimbursed, then it is taken as something that is well thought out and there is confidence. And entire banking industry runs on basis of confidence, confidence in the institutions. And as long as people have confidence in the banks, they will keep the money there and wait for sale at maturity bonds to mature. But if the confidence goes away, they want their money as of now. And that's when many banks have a run on the bank and they have problem because all of a sudden they have to sell their long-term securities as well. And when they do that, they have to incur losses, especially because the interest rate is high. If the story was the other way around, like let us say 3 years down the line, the banks have already bought bonds at this high interest rate now. And 3 years down the line, the interest rate has gone down. And if somebody does a run on the bank, they won't have any problems because all the bonds that they bought now is going to be worth a very huge amount when the interest rate goes down, because the face value of these bonds will be very high. So they stand to make a big killing. For that matter, whoever buys the portfolio from SVB is going to make a big payday when the interest rates start going down. So it's all a question of when you bought a security, at what price you bought, and what is happening right now. So with that said, let's put that topic aside. I want to talk to you about something very interesting. I have got both Microsoft and Google in my portfolio. And in the past, I have been very partial to Google. And right now, my thought process has changed totally. And what has changed the whole thought process is a bunch of new things that have happened. First of all, the way Microsoft announced ChatGPT, it was sudden, it was very interesting, and then they put a huge investment into it, and immediately they had the road shows and everything. So they bet Google to it. And Google tried to catch up, but they didn't do a good job. They had some mishaps in their presentation, and Google share price fell. But one of the reasons why I'm even more bullish on Microsoft now has got to do with their new latest Edge browser. We all know that they said they're going to introduce AI as a co-pilot. I'm not talking about the co-pilot. Co-pilot, of course, is good. And I have personally used ChatGPT for quite a few things, like optimizing text and optimizing descriptions and so on and so forth. It does a really good job out there. But what I'm talking about is what I see in my phone out here. I have an iPhone, and the latest version of Edge that I have on this iPhone is amazing. It's got a lot of new features that is really mind-blowing. It's very simple things, like it has got feature that allows you to send from one device to another. So if on my PC I have the most of the times what I do is I write the script for my video in one PC, and sometimes I write it on my iPhone, and then I email it to myself. Now I don't have to do it. I can just drop it to my PC, because my PC runs Microsoft Office with Edge, and I have got Microsoft Edge on my iPhone. I can just drop it like that. The other problem where I used to have to do a lot of work was that when I make shorts, the shorts have YouTube music, but I cannot use YouTube music outside of YouTube. So if I had to put it on Instagram or Facebook, I have to change the soundtrack on the shorts. And for that, unfortunately, Instagram doesn't allow you to do that on the PC. You have to do it on the iPhone. So I have to move the video, the shorts video from desktop into my iPhone. And in the past, I had to send it to my email, and from the email, I had to save it. And then I have to move it from the saved location into the photos album, because that's where Instagram allows you to pick it up. And then you change the audio soundtrack and then release it into Instagram. And it used to take me half an hour to do those things. But now I can just push the video file from my desktop into my iPhone, and it goes directly into my album. I can save it in my album directly. And off I go uploading it into Instagram, so I can put more shots on the Instagram. So I personally found some of these features to be really good. And before this, I was a great believer in Chrome. I used Chrome most of the times, even on my desktop. But now everything has changed, and I'm totally onto Microsoft. And believe me, Microsoft already has Microsoft 365. So I have a subscription which allows me 5 machines. So I have Microsoft on 2 of my PCs and on my cell phone. And I can open the Microsoft documents out here. Plus, they have now in the process of enabling AI into the entire Microsoft Office suite. So can you believe how much ahead Microsoft has gone? Google, on the other hand, is a bit late to the game, but has got more vulnerabilities due to its wider social exposure in social media, and is battling the news agencies around providing news in search results. Of course, Bing search will also have similar problems, but Microsoft has exposure to YouTube. That's another place where it has got a lot of exposure. And as they operate across the world, there could be objectionable videos from a political perspective or inciting violence or whatever. And those kind of things are all going to keep on putting Google in the hotspot. So that's a risk that is built into Google. And of course, Microsoft Azure is now going to get a bigger uptake of the AI business, because Microsoft is heavily into ChatGPT, and it's trying to lead the AI frontier. And its Azure cloud services are likely to benefit with more business in that area. So, well, friends, now let me summarize. If the big banks are in trouble and the Fed is unsure if inflation is falling, then how can we as retail investors be able to predict the future? So I can't make any prediction at this point of time what's going to happen with the indices, but I feel that the chances of them going down is much higher than going up. Some say Powell will raise the interest rate by 25 basis points, but I think we are in for volatility regardless, whether he does a 25 basis point or 10 basis point. This is going to weaken the banks, and whatever happens after that is something that we'll have to wait and watch. But in the meantime, gold and Bitcoin will definitely continue to gain until at least after the Fed speech on Tuesday. And depending on what he says, we'll see whether gold and Bitcoin will continue to go up and whether the bank stocks fall further. So friends, I hope you enjoyed this segment. It's not genomics, but I hope you did enjoy it. I'm wishing you a very happy Sunday, and I'll catch up with you in the next video. Bye for now.